We're going to talk about how to get out of debt with the tax-free cash growth warehouse snowball sweep strategy. What's your get out of debt strategy? Do you have one? If you have no debt, wow, good on you. And if that's the case, you don't need this video. But even if you have no debt, you probably know of relatives or friends who do, and I'm sure they'd really appreciate it if you would share this video with them. And according to statistics, about 80% of all Americans have some form of consumer debt, such as credit cards, mortgages, auto loans, student loans, etc. And get this, the average consumer debt per adult is over $92,000. That's a pretty good chunk of change, yeah? So if those stats include you, what are you doing about it? Do you have a plan in place? Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the last several years, I have focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. If you find this video to be helpful, please like the video and subscribe to this channel. Also, please post your questions and comments here. Now, one of the more popular strategies suggested by many debt counselors is to open new credit card that offers a 0% interest for 12 to 18 months or more, and then transfer the balances from a high credit interest card to that one. That's debt sweeping. You sweep the debt from one higher interest account to a lower interest account. The idea is, of course, to save you a year or more of interest on the balance. And that's not a bad thing in itself, but you will have to pay a fee for the new card to take the balance from another card. And then after the interest-free period, whatever balance you have left on the new card will start accruing a fairly hefty new interest charge. So if you do use that strategy, you need to really pay that balance down during the interest-free period, or it won't really be that helpful. Another idea or another debt sweeping tool to use is a personal line of credit or home equity line of credit. Those generally start off with a pretty low interest rate for the first year and then go up a couple of points after that. In any case, all the money you pay to the balance of your credit debt is gone forever. Sure, once you've paid the balance down or off, you'll then have that amount of credit available to use again. But as soon as you use it, what's going to happen? Those high interest charges go right up again. A far superior debt reducing strategy is what we call the tax-free cash growth warehouse sweep and snowball strategy. Here's how it works. First, you need to have a tax-free cash growth warehouse account set up, and you'll need to have enough cash value in it available for leveraging. Now, assuming those factors are in place, you will then leverage your cash value with a policy loan to pay off your smallest balance credit debt. Now, if you have enough cash value to do it, and you have a larger credit debt that has a higher interest rate than your smallest credit debt carries, you would do well to pay that one off first. Of course, when you leverage your TFCGW cash value, you're taking a policy loan against the cash value. And while you aren't contractually obligated to make monthly payments to repay the loan, you do want to do that. And you will want to make at least the same payment amount to the policy leverage loan as you were making on the credit debt you paid off with it. So why and how is this strategy far superior to any other version of sweep strategy? Whether you pay off one credit card debt with another temporarily interest-free credit card or any other type of credit loan, the amount you pay toward the debt not only is gone forever, but you're also incurring lost opportunity cost. Again, you may be able to utilize the new available credit once it's paid down, but again, you'll be racking up the interest charges on it. And as you make payments against the debt, you're again giving up the money forever and paying the lost opportunity cost. By using the TFCGW sweep and snowball strategy, first, when your account is with the right insurance company, not only will the simple interest charged on your leverage loan be lower than the dividend interest you're earning on your cash value, but you'll also be saving the lost opportunity cost because your cash value will continue to earn that high compounding dividend interest even while you have it leveraged. And every dollar you pay against the leveraged loan becomes available for you to use again, even while it continues to grow with that high compounding interest. Moving forward, now that you have that one credit debt paid off, and when you have enough cash value available to leverage to pay off another one of your credit debts, you repeat this strategy. You take another leveraged loan and pay off the next credit debt. Now remember, you will want to pay at least the same amount on your leveraged loan as you were paying on the credit debt you just paid off, plus the amount you were paying on the previous credit debt you paid off with this TFCGW sweep snowball strategy. Why? Well, because that way, first, you aren't paying more than you were, unless you can and you want to, but you are snowballing the availability of your cash value, which will enable you to continue paying off your credit debt faster and faster. Especially since your cash value is continuing to grow with the high compounding dividend interest, and it's also growing each time you make a premium deposit, which in turn earns more of that high compounding dividend interest. And while your cash value is snowballing, so is the amount of credit debt you are crushing with this strategy. Remember also, the more and faster you get that credit debt paid off with this strategy, the more lost opportunity cost you are not paying. So the more you are saving. Snowballing and snowballing. Snowballing your credit debt like this is a wonderful thing. Before too long, your TFCGW account will be the only banking account you ever need. You have questions? We have answers. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our 60-minute video webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. If you'd like to book a free phone consultation with me, the link to my Calendly page is also below. And if you'd like to apply to become a client of ours, the link to the application is right below here. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.